Welcome to the Ottawa Business Journal's live broadcast of Retain, Reward, and Retire Leveraging IPPs for Owners and Key Staff. I'm Michael Curran from the Ottawa Business Journal. Thanks for joining us today. We're live on YouTube and LinkedIn. Thanks for spending your lunch with us. It's like a power lunch of sorts, so appreciate it. And I'm very happy we're focused on an issue that doesn't get a lot of attention. Certainly not on the OBJ side. We're very focused, of course, on operational issues and opportunities. But at OBJ, we don't often talk to our core audience of business owners and entrepreneurs about how to plan for what comes after work. And by after work, I mean when we retire. Today, we're going to touch on a little known financial instrument that can help you with your retirement. So your retirement as a business owner and entrepreneur, but also help retain key employees. This often overlooked financial instrument is called an individual corporate sponsored pension plan. That's a mouthful, so we're going to call it IPP. And today you'll discover how an IPP can be your competitive advantage for powerful retention, for tax efficiency, and simple implementation. Of course, when you have complex things like this and you need to simple implementation, you need an expert. And we've got a great one here today, and I'm excited to introduce her for a couple reasons. Partially because, as I said, she's an absolute expert. You'll hear and see that in just a second. I also think she's done a great job in the local business community from a leadership point of view. She's sat on the board of directors of the Ottawa Board of Trade. She's a past 40 under 40 recipient. She's in fact helped me on the selection committee of 40 under 40 for several years, and also helped with other community events such as Dress for Success. But let me fill you in on her professional bio. She holds an economics degree from McGill, MBA from Rotman, and she spent almost 20 years as a tax partner at a Big Four accounting firm before transitioning to personal wealth. And in 2017, she joined Paula O'Brien's team at Richardson Wealth. In 2021, she took over the practice. She holds a chartered professional accountant, CPA-CA designation, as well as the Chartered Investment Manager, CIM credential. Let's welcome her now. Here comes Joelle Hall. Hey, Joelle.
Hi, Michael.
It's great to have you on, especially we know each other quite well, and you've helped in all sorts of local business leadership things, probably even starting with the Orleans Chamber, Ottawa Board of Trade, 40 under 40. So I really want to start by thanking you for being such an active member of the local business community. You do a lot outside the confines of your own business. But let's talk about Richardson Wealth. I hope everyone's familiar with it, but give us a primer on what Richardson Wealth is, Joelle.
Sure. So Richardson Wealth is the umbrella organization that I work with. We're an independent wealth management firm providing a full range of financial and wealth services. Then within Richardson, I have my own practice, Hall Wealth Counsel, and I essentially wrap tax and financial planning advice around investment advice. Ultimately, I want people to do what they enjoy with the people that they care about. And I think as a CA, I speak the language of my clients, the business owners, advisors, and work with them to find sort of the optimal structures that integrates both their personal and the corporate elements.
Yeah, I like what you said there, and I listed off your credentials. They're pretty spectacular. But you are differentiated, I think, from a lot of other wealth planners. As you indicate, you're specialized in business owners and entrepreneurs. You bring that CA practice. So you can help kind of integrate the entire plan and equally, I think, put it into action. Is that part of what you're doing over there, Joelle?
It is. So I'd say I liaise with my clients' advisors. I help interpret what an advisor's advice has been given, and don't charge by the hour to do so. But because I spent 20 years in a public accounting firm, I was a tax partner. I do understand the tax concepts and tax elements, but I really enjoy educating people and simplifying sort of complex tasks. So I work with my clients to help them understand what their advisors have suggested, and then also work with the advisors so that we can optimize sort of what I'm doing on the portfolio and investment side of things with what they're proposing from sort of the income tax accounting side of things.
Well, that sounds pretty invaluable to me to bring all that advice together, because sometimes it does, as a business owner, get just overwhelming, and your lawyer saying something, and your accountant saying something, and maybe you have a specialty tax accountant. You're like, okay, what do I do with this?
Yeah.
And that's you. You
I'm
ask
the
Joelle.
interpreter. Yes.
That's what you do. The interpreter.
Yeah.
I love that.
Yeah.
Because you're going to be giving some advice out here, we're going to pop a disclaimer slide on screen there. That's kind of like when I would see the CFOs of publicly traded companies put the safe harbor message up there before they started doing something. All right, that's great. And as we often do, we broke today's show into 3 topics. And the first topic, which I kind of teased there, I'm really happy we're talking about this, is retirement savings strategies for business owners. Topic number 2, we're going to get into and define what an actual IPP is. And then in our third topic, Joelle, we're going to talk about how the IPP can work for key employees and owners managers sometime around 12:25 for our live audience on YouTube and LinkedIn. We will be going to you for questions. So you can ask those questions at any time. So you don't need to wait until 12:25 as Joelle says something and it triggers a question in your head. Just ask it right then. And finally, before we dive into topic 1, we're going to be doing a live poll. This is something we introduced a couple shows ago. So in between topic number 1 and topic number 2, we'll be going to our live audience, and I'll give you some more instructions on that. All right, Joelle, let's get down to business. And topic number 1 is retirement savings strategies for business owners. Tell us more.
Sure. So I think the first 2 are probably ones that we've heard of and are very familiar. So the first is investing inside the corporation. Doesn't really require a lot of thought. Whatever profits are left in the corp, you start to invest them. There's, I guess, no deduction for the money that's invested. There's not a lot of thought necessarily that has to be put into this, except for once you start accumulating investment income in the corporation, this is considered passive income. And if you've heard anything in the last few years about investing in corporation, passive income is not a good thing. It can impinge on the small business deduction, which is a good thing for corporations. And so it's very flexible, but it just doesn't have a lot of structure or necessarily thought about it. It's sort of the default. Then there's the RRSP, and the RRSPs apply to both business owners, your regular employees, all those kinds of things. In this case, you would pay out sufficient income or additional income to the individual for them to be able to then make an RRSP contribution to their own RRSP account. I guess the limitation on this is that the amount that you can contribute to an RRSP is limited by CRA formula. It has an advantage that the funds inside the RRSP are tax sheltered, and so that's a good thing. It's pretty common to all of us, very familiar to many of us. The third option is the one that's a little different. It's called, as you said, an individual pension plan. And so as it sounds, it establishes a pension fund for the owner or key employee, as we'll talk about later, using corporate cash flow. So in this case, it's a good thing because it creates a corporate deduction. The funds that go into the pension plan are tax sheltered, so they don't get taxed until the money is pulled out. One great advantage of an IPP is it does provide very strong creditor protection, so that if the company was ever sued for any reason, the IPP is protected outside of the corporate funds.
Okay. I'm going to play the role of the person that asked the dumb questions.
Sounds good.
And I'm asking them on behalf of our audience, but I have a lot of dumb questions in my head too. So the first option there, so I think we're talking about retained earnings staying inside the company, potentially just like in a bank account, potentially, invested. I've heard, potentially a dumb question, that sometimes you want to be careful about that because companies can be sued. You might run into financial difficulties. So you probably don't want to keep your retirement savings inside the company. You want to keep some degree of retained earnings, but is that a legitimate thing to think of? And we're going to stay focused on IPP, but I just want to ask a couple of dumb questions on the retained earnings and RSP, Joelle.
Yeah, I mean, I think it helps sort of elicit sort of the advantages of the IPP or the differentiators when we talk about the other options as well. So yes, certainly with corporate investing, if you're investing the excess profits that are left over after you've paid yourself a salary that are still in the corporation, and yes, they would be there's sort of very limited creditor protection for the funds that are held inside the corporation.
Yeah. And that's my point. Like, just be careful about doing that if you're watching this. RSP is something, that is very common. I think we've had RSPs for 20, 30 years in Canada. But again, if you're a business owner, here's the dumb question, you're probably maxing out at some point. Like, it's like, okay, you've hit your maximum RSP contributions. You should look at a different option. Is that a fair statement?
Well, yeah, you earn new contribution room every year, but it's limited to sort of 18% of your income up to a maximum amount. It's kind of $32,000 a year that you can put into an RRSP, and you have to pay yourself the funds for you then to be able to make the RRSP contribution. Now you do get that RRSP deduction, but it's still increasing your income overall.
Yeah. And then again, we're going to stay focused on RSP, but the potential disadvantage is there are some restrictions on how you withdraw that money when you retire or you hit a certain age. And I'm asking, go ahead.
Yeah, I would say a little bit more restrictive than if you're investing in your corporation where there's ultimate flexibility. And then I'd say slightly more flexible actually than IPP.
Okay, cool. So the IPP, and we're going to define that in topic number 2. I think one of the initial things that strikes me about that is in a town like Ottawa, where there is a remarkably high number of people walking around with index pensions. Of course, I'm talking about our friends mostly in the public service, but also, in major corporations. That you start thinking about, well, I have a pension. There's a bit of peace of mind that comes with that. So there's an appeal to the word pension.
Yeah. There is, yeah. You're right. We're very familiar with defined benefit pensions here in Ottawa, and that sort of security and reliability of an income stream in retirement is very comforting.
Okay, good. All right, we're going to go to topic number 2, but before we do, we're going to pop a live poll on screen. And here's the question we're asking you. You'll have about a few seconds. The key thing here is use the number as in like 1, 2, 3, 4, the digit. So if you want to vote, just put the digit in, like literally put just number 1 in, or number 2 or number 3 or number 4. You can read it on screen. We're asking about what result are you looking for in your financial planning this year, better tax efficiency, so on and so forth. And I think we'll get the results up there. Potentially, there you go. People are looking for better tax efficiency, if I can read that correctly. So stay tuned. We're going to go to another poll after number 2. But we teased this sufficiently here, Joelle. So topic number 2, let's get into this. What is an IPP? Tell us more.
So it is a corporate defined benefit pension plan for either incorporated professionals, business owners, and I think the key thing here is also for their key employees. The beauty is any contribution that the company makes to the pension plan is tax deductible for the corporation, but it's not included in the employee's income. So, there's a nice sort of benefit on both sides of the fence, so to speak. The thing is that the contributions are established and defined by using an actuarial calculation that's based on both sort of the earnings of the employee and the years of service. Typically, the deduction that you can make, or sort of the contribution you can make to an IPP, is larger than what you could contribute to an RRSP, given sort of the same income and the same age of individual. So from that point of view, there's an advantage to the IPP because of the greater savings capacity. I'd say a thing to really consider is that because it's a pension plan, there is a real sort of pension obligation that becomes established for the company. What else can I say about IPPs? The beauty is by moving the funds into a pension plan, they're no longer sitting inside the corporation. They're not being passive income that's creating that tax drag. They are then creditor protected, as we discussed before. And it's possible that you could get some additional deductions for either past service or just before retirement, what we call the terminal funding, sort of like shoving some extra funds into the plan to make sure that the capital in the IPP can sustain the pension income that's expected.
Okay. And again, let me ask the dumb questions, and I'll ask it from specifically the perspective of a business owner. So in topic number 3, we're exploring it more from an employee point of view. But I think I heard you say that I can contribute more to an IPP as the business owner than I could for RSP. So there's an advantage.
Absolutely.
If I did contribute more, you also said something, like it is an actual pension plan. So there is an obligation to continue contributing. This isn't like, year end rolls around and I'm saying I'm going to take a dividend. Again, we'll stay away from employees, or I'm going to give you a bonus. So if I did give myself a good, lump sum of money in an IPP as the business owner, do I need to stay at that level as the business owner?
So what determines it is the actuarial calculation. Okay. So there is a real obligation to fund that. So, if your earnings are skinny or quite variable, an IPP may not be appropriate for you. But this is for a company where there's pretty consistent earnings, where there's excess earnings above what you would be taking as your salary. So you have to have the capacity to be able to fund the IPP on an annual basis. And I love it. In part, sorry, I'll just finish. In part, it does also then how has the fund done and performed, and then the actuarial calculations are what are the expectations of how it will perform and going forward, and how long do you have to retirement, et cetera, et cetera.
Okay. And again, just to reiterate something you've said already, another advantage of the IPP as the business owner is these retirement savings are separate from the assets of the corporation, or at least protected to some degree if the company were to run into any sort of issue like insolvency or...
because it's a pension plan, highly protected.
Okay, highly protected. So that's a key thing to think about here. So
very much so.
But I did hear again what you said, which is if you're the owner of a business that doesn't consistently perform at a certain financial level above your personal earnings as the business owner, and you've got a lot of fluctuations and that type of stuff, be careful. This might not be, so you want some stability and some strong, sustained financial performance. Is that how you would put
Correct.
it? Okay. Yeah. Okay, good. And of course, we're going to tease in topic number 3, talk about this from a key employees and managers perspective. But before we do that, and I saw a lot of people, we're going to do another live poll, and I saw a lot of people voting after the poll was down. So you can only vote when the poll is up. So you got about 10 seconds or something. So here's your heads up. The poll is coming. 1, 2, 3, boom. This poll question: which retirement vehicle makes the largest portion of your wealth strategy? Personal RSPs, TFSAs, reinvesting back into the corporation, corporate investment portfolio, no formal exit retirement plan. I hope it's not that one. And so now is the time to vote, not in 2 minutes or that type of stuff. So hopefully you're close to your keyboard and just vote with a number. So just the number 1, just number 2, just number 3, just number 4. You can do so on either side. We'll get a response here in a second. There we go. So people are liking number 3, which is a corporate investment portfolio. Okay, that's good.
Yep.
I like the fact that they didn't say no formal exit or retirement plan.
There you go.
Okay, so not only is an IPP interesting for the employer, it could be interested for employees. That's a key advantage. So let's walk us through. So IPP for key employees versus owner managers. We'll bring a graphic up on screen here so we can take a look at this.
So absolutely, this tool can be used for both the owner manager as well as for key employees. And it is clearly a very strong retention tool that you can use for key staff. I'd say the caveats would be that because it creates a pension obligation, you're making a long-term commitment to that employee. And if you were ever to go sell your business or get bought or whatnot, that obligation may complicate the negotiations to a certain degree. But that I'd say is the only sort of flag or differentiator between whether you're using it for yourself or for key employees.
Okay, good. And it's a key employees, powerful employment retention tool, long-term corporate pension obligation. Be careful there, and introduce compensation equity considerations. Can add some complexity to M&A. So we have a lot of questions actually on some of these topics. So let me just scroll through some of them. So we'll transition, if you're watching live, into the question mode. And I'll just give some shout outs to everyone. Thanks, Jeff. Jeff's joining us from LMR Lawyers here. She wants to see Joelle in action. A fan of Joelle is in the house, as they say.
Yeah, a longtime friend of my sister's, actually.
Okay, that's hilarious. All right. So in no particular order, mystery shopper, I like this. I like your handle there. What income level does an IPP start becoming more advantageous than an RSP? Is there an easy? So Joelle, I'll preclude all of this by saying we're putting Joelle on the spot. So if the question is too complicated, Joelle, we can follow up with people, but that's the first question we're throwing at you.
No, actually, it's a really good question. So the characteristics, and I think this is going to come probably on the takeaway slide, generally employees 45 plus, income around $150,000 plus.
Okay, good to know. And I think we have this question a few times.
Oh, I like that.
Yeah. Okay. In fact, no, it's the next question. What happens if an employee leaves the corporation? So you've implemented an IPP, you're benefiting this business owner, I've given it to key employees, and now they decide to leave. What happens then, Joelle?
So you've got that obligation for the period of service, but that obligation exists for that period of service.
Okay.
Yeah.
And that's obviously defined in legal documents and so on and so forth.
Yeah.
So not a lot of legal concerns on this. No.
Well, it's the same as whether you're funding them to retirement or not. That obligation exists. Obviously, it's a smaller obligation if they leave you compared to if they work right through to retirement. But it's definitely a big consideration.
Okay. I think we have this question 2 or 3 times. So I'll just pop them on screen. It's effectively, what happens to an IPP if I decide to sell my business or retire earlier than expected. So thank you. And we get a similar question: what happens to IPP if they sell the business earlier than rather expected? So yeah, so if you sell the business, again, from the perspective of the owner, if I sell earlier than if I sell or retire earlier than expected.
Well, certainly if you sell, the obligation to provide the pension income carries with the corporation.
Okay.
So it's a big consideration. If you decide to retire earlier, I mean, it's the same thing if you had a defined pension benefit somewhere else, that the obligation still exists. It's just for a smaller pension.
Okay. Got it. It's good. So I'm stretching my legal ability, my legal knowledge here. Sometimes you have people buy a corporation, sometimes they do an asset purchase. With the IPP transfer in both those cases, or that's way too complicated of a question, Mike? Don't ask me stupid things like that.
It definitely not stupid. Too complicated for today's platform.
Okay. All right. Here's the underlying message is call Joelle after this. And I should note though, I've been using the term business owner and entrepreneur. This is also for incorporated professionals. And I say that because I think some of the people asking questions, I'm recognizing their names, Joelle, and they're I assume they're an incorporated professional.
For sure. I do know a few accountants, small practice accountants who have their own IPPs.
Okay.
So, yeah.
That's really interesting. Here's another question. Kind of apply to me. Does IPP make sense for late career owners? So let's say, your mid 40s to 50s, and you've got a runway of 15 years, 20 years. Does it still make sense to consider?
Yes, it does. Yeah. Okay. If it starts to make the most sense when you're 40, 45 plus. So I think this is a great tool to start thinking about sort of in that later career, mid or late career.
Okay. I assume this question's a yes too, but let's ask it. Can I use an IPP if I already have substantial RSP savings?
You can. You may not want to. Okay. The reason being is that in both cases, that income comes into your hands as income, the same way that sort of employment income does. It's the full tax flows. Full cash flow is fully taxable, and so if all of your retirement funds are in these types of tools, you're creating large income inclusions every year. There's not a lot of tax planning that can be done if you pass away early. There can be big tax bills associated with them. So I think that probably the best plan is using a hybrid, some corporate investing for maybe some growth assets for some flexibility. You can take that out before retirement if you decide to buy a boat or I don't know, something crazy. The IPP can be used more or the RSP more for your fixed income side of your portfolio. But in everything, there's no one solution that is the be all and end all. In most situations, hybrids or hybrid plans are probably your best approach.
Yeah. And I think, again, the underlying message here is you would need to understand someone's financial picture at a deeper level than just kind of this hot take, as they say. Listen, we're almost up to the bottom of the hour, but we got some other good questions. I'll try to get to them here. I think this one's really interesting. Can I make past service contributions to an IPP for years I was already incorporated? It sounds like almost going back into time. So could I do an IPP now, but my business was incorporated 10 years ago?
Past service contributions, yes, they get factored into the contributions you can make, which is how you can kind of make larger contributions and where the additional corporate deduction comes from.
Okay. And we'll end with this one before we go to our wrap up. And we could probably do a whole show on this one, I suspect. But for small and medium-sized businesses, what are the biggest mistakes owners make when trying to use compensation or retirement structures to retain top talent long term? Well, that's a big one. Any
That's a
simple?
loaded question. I feel like that's an HR question, not
Okay.
an investment advice question. But yeah.
Some of the big mistakes that you just give me one, maybe. This is I think it's a big topic, but what's one mistake you see business
you hear
owners?
you hear a hot idea and you decide that you're going to run with it without
Yeah,
thinking about the long-term consequences.
yeah,
And so this, I mean, the challenge with an IPP, if you decide to use it for a key employee, and you have maybe a couple of 1A employees, it may cause a little bit of tension because of compensation inequity between them.
yeah.
Or you think that this individual is really committed to your firm, and you go ahead and implement something that has long-term consequences, and maybe they're not as committed as you thought they were.
Yeah. Yeah, and that's more on the HR side, as you indicated, than a
Yeah.
financial or tax consideration. Well,
Yeah.
listen, thank you so much for all those questions, and we do really appreciate it. We're just past the bottom of the hour, so we'll bring up our takeaways, and you can bring us to the conclusion here with some of these points, Joelle.
Yeah, so I think we've touched on them all, so that's great. As we'd said, it applies for both, or not both, for all of incorporated professionals, business owners, and potentially for key employees. Usually makes the most sense for individuals 40, 45 plus, where they've got stable income of around $150,000 or more. And this we talked about because of the obligation to fund a pension that this creates. The corporations have to have consistent cash flow. It's very, very useful where creditor protection is important. And for the individual, some people really appreciate flexibility, and others prefer sort of predictable retirement income. Although most of the entrepreneurs I know tend to be a little bit more on the risk tolerant side of things. But as I said, I don't think any one tool is the most appropriate in all cases. Generally, I think using a combination of tools in the toolbox is the best way to go.
Well, that's great. Wow, did time fly? Well, you're having fun, as they say, Joelle. Well, thank you very much. I'm sure some people watching and or listening have some questions for you. So we're going to bring up your contact slide. So this is how you can get in contact with Joelle. And again, just to tease a couple things, if you register for our live broadcast like this one, you'll get the slides and you'll get Joelle's contact information so you can follow up afterwards. Joelle, I want to thank you for sharing all of this expertise. It's something, we need to talk about a little bit more about business entrepreneurs, as you said, are risk takers, and they're very into it up to their eyeballs often, and sometimes focused on today and tomorrow, and they're not looking down the road, Joelle. And that's exactly where your service comes in, right?
Absolutely.
Okay.
Thanks so much for having me, Michael.
Yeah, thank you for joining us. We hope to see you real soon, and appreciate Joelle's leadership in the local business community. We'll probably see her at an Ottawa
at the
Business
40 under
Journal.
40.
At a 40 under 40. Well, there you go, June 18th. So everyone's thanking you. Thanks again, Joelle. Appreciate you being with us.
Thanks, everybody.
And before we wrap, I want to point out and remind everyone that you can visit obj.ca website every day, Monday to Friday, for the local latest and local business news. In fact, we just relaunched the website. It's got a brand new look, brand new functionality. I highly recommend you subscribe to OBJ Today, which is our weekday, I should say, email newsletter. That email's existed since, believe it or not, the late 1990s. So been going on for almost 30 years. And if you're thinking, why the heck do I want another email in my inbox? This one's going to give you a quick rundown of the day in business from a local perspective. You can read it in 15, 20 seconds. If something interests you, of course, you can click on through. Follow us on social media. We're approaching 45,000 followers on LinkedIn. And if you're on YouTube right now, do us a favor, click the red subscribe button and the little bell icon. And if you do that when we're live, you'll get a notification on your phone or desktop computer. Thanks again for watching. We hope to see you real soon, everyone. Cheers. So long.